Welcome to Explain the Charts, your go-to source for unbiased market insights. Today, September 16th, 2025, we're diving into an in-depth analysis of BTCUSD, looking at the latest news and what the charts are telling us. Let's begin by looking at the daily chart for BTCUSD to get a broad overview of the recent price action. The overarching sentiment surrounding Bitcoin remains bullish, largely fueled by recent macroeconomic data. News reports indicate that cooling U.S. inflation, with the producer price index coming in lower than expected, is pushing investors toward risk assets like Bitcoin. This positive sentiment is further bolstered by strong institutional confidence, as evidenced by substantial inflows into spot Bitcoin ETFs, totaling nearly $1 billion in just 2 days recently. Major players like BlackRock are even exploring tokenized ETF shares, signaling deeper integration into traditional finance, and MicroStrategy continues its aggressive accumulation strategy, holding over $73 billion in BTC. The discussion around potential Federal Reserve rate cuts, with a 100% chance anticipated by markets, adds another layer of optimism, traditionally benefiting risk assets. Bitcoin has also demonstrated remarkable resilience since its inception, with its market capitalization exceeding $4 trillion as of January 2025, and countries like El Salvador adopting it as legal tender, reinforcing its long-term relevance. Now, let's zoom into a more recent period on the daily chart, specifically from January 2025 to today, to analyze the key price levels and recent trends. We can observe a significant rally that peaked around $123,380 in mid-August 2025. However, this was followed by a sharp pullback, aligning with news about a notable Bitcoin whale reportedly offloading over $4 billion worth of BTC for Ether, signaling potential short-term selling pressure. The market has since found some equilibrium, currently trading around the $115,000 level. Looking at our chart, we identify a critical support zone around $113,000, which news sources also highlight as a crucial area where new investors are absorbing supply. Conversely, solid resistance is currently faced at $117,500, a level that the price has struggled to break decisively in recent attempts. Technically, some analysts are pointing to a MACD golden cross on the daily chart, which historically led to a 40% price increase, suggesting a potential rally towards $160,000 in the coming months, and even $200,000 by 2025 if rate cuts materialize. To understand the immediate price action and short-term volatility, let's shift our focus to the 15-minute chart, covering the last few days from September 10th to September 15th, 2025. Here, we can clearly see Bitcoin consolidating around the $115,000 mark, bouncing between minor support and resistance levels. The market appears to be in a crucial phase, with the price attempting to establish a stronger footing above $115,000 after its recent dip, as reported in today's news. High transaction volumes during periods of price swings indicate active participation from short-term traders. The anticipation of the Federal Reserve's rate cut decision, which is imminent, is undoubtedly contributing to this heightened sensitivity and range-bound trading. Day traders should closely watch the $115,000 level. A sustained break above it could signal bullish momentum towards the $117,500 resistance. Conversely, a breakdown below the $113,000 support could invite further selling pressure. The integration of AI tools like Google Gemini AI, which can help manage risk and cut through market noise, becomes particularly valuable in these volatile, fast-moving conditions. Circling back to our daily chart for a final recap, let's consolidate our findings for BTCUSD. The current price of Bitcoin is hovering around $115,400, acting as a crucial pivot point. Immediate critical support lies firmly at $113,000, which has demonstrated resilience and is bolstered by new institutional buying interest. A bounce here has a 70% likelihood in the short term, especially if positive inflation news persists. On the upside, strong resistance is encountered at $117,500, Breaking this level is key for a bullish continuation, with a 60% chance if macro sentiment remains strong and institutional inflows continue at current rates. Should Bitcoin decisively break above $117,500, a rally towards $120,000 to $124,474 becomes highly possible, with an estimated 55% likelihood driven by sustained momentum and positive news. In the long term, if the macroeconomic environment remains favorable with continued rate cuts and ETF adoption, targets of $160,000 to $200,000 by 2025 are predicted by some analysts, carrying a 40% probability given Bitcoin's historical volatility. However, a significant whale dump, as recently reported, poses a bearish short-term risk. Watch for increased selling pressure around these resistance levels, which could lead to a retest of $113,000 or even deeper support levels if it gains traction, with a 30% chance. Keep a close eye on upcoming economic indicators and the Federal Reserve's actions, as these will continue to be primary catalysts for Bitcoin's price movements. These external factors, combined with on-chain data like large whale movements and ETF flows, are essential considerations when deciding when and what price to trade. Thank you for joining Explain the Charts, and remember to always do your own research before making any trading decisions.